last session, what are the things we have covered? If you people remember,
We have covered
Defining
company creation,
We
the
have
structure.
completed the
defined-
definitions and
Assigning.
assignment.
designing
correct,
part.
definition part we have completed and complete assignment part we have completed.
Assign.
But in that both the parts, we have been not completed the profit center.
Profit center.
That's what I said, right? That we are going to cover at the end. Correct. And we have seen
Yes.
how to unlock the screens also if it is locked.
Yes.
Yes.
SM12
Yeah.
T code.
So we have seen a last assignment was assign company code to FM area, right? So today we are going to see company code global parameters. Just write down this. These are the steps we need to do after completion of definitions, after completion of assignment. We need to do the configuration, the company code global parameters. So most of the interview questions, I'm telling you, out of whatever interview questions you are going to face, so most of the interview questions we are going to get, we can expect from company code global parameters only. Clear? So this is the most important topic. So everything is important, but interview point of view, like basics, whenever they want to ask basic questions, so most of them are covered from these particular steps. So write down. Hope everyone are able to see the screen.
Yes, Naveen.
Yeah, just write it down the screen. Company code global parameter steps, write it down. And let me know once you are done.
We need to write all the 10 steps.
Yes, you have to write. And we are going to cover one after the other.
Okay.
Okay, if you need to check every time what are the global parameters steps, what are the steps involved in. See, like definition, what are the steps involved in, assignment, what are the steps involved in, and company code global parameters, these 10 steps we need to remember. Means they'll ask what are the things you will do in company code global parameters. So they may ask, people says that sometimes literally they will ask company code creation, and that they will say. So, but there is no company creation or company code creation over here. So please go through this and please write it down. Put it on a paper. Once you're done, let me know, please.
Done, Naveen.
Okay. One second. Okay. So these are the 10 important company code global parameters. So which most of the interview questions are covered, expected, whatever may be the designation. Okay. Expected, whatever may be the designation. So let's go for first chart of accounts. Write down chart of accounts. Chart of accounts. Write down. Write down chart of accounts. Chart of account is a library of GL masters.
Sorry, Navi, it's library.
Yeah. Chart of accounts are library of GL masters. Based on this, we can record, based on this, we can record day-to-day transactions. We can record day-to-day transactions. And also we can generate all financial reports. We can generate all financial reports for internal and external stakeholders. Clear? So in other words, write down in other words, chart of accounts are nothing but list of ledger accounts. Chart of accounts are nothing but a list of ledger accounts which are involved in day-to-day business transactions. In day-to-day business transactions. Full stop. Ledger accounts are nothing but the individual accounts involved in business transactions. For example, debtors, creditors, purchases, sales, cash, bank, rent, salaries, commission, etc. So Many more it will involve. Clear? So there is a concept. Before I'll start this chart of accounts, I'll tell you. Do you have anyone have a idea about your second year accountancy or your BCom accountancy or your MBA accountancy, financial accountancy? So how many types of balance sheets can be prepared? How many types balance sheets can be prepared?
Vertical and horizontal. I know this.
That is not type. Those are methods. Horizontal method of balance sheet and vertical method of balance sheet. I'm asking types. So hope everyone are accounts background students here. Or means their basic degree is from accounting, commerce.
Oh, no, Naveen, I'm not. I'm from BSc.
Deepti, right?
Yes, sir.
Yeah, Deepti, I can understand. Okay, fine. How about others? How about others? Rest.
Yes, Naveen, we are from BCom.
Correct. So a layman prepared a balance sheet on a piece of paper. No heading, nothing. Normally we will prepare a balance sheet of so and so as on, right? Heading would be prepared balance sheet. So, but layman, I said, he don't have any
Trial balance.
no, I'm not asking trial balance. A layman prepared a balance sheet on a piece of paper. Okay, a piece of paper, and he has not mentioned any headings or something else. Clear? And you people are accounting students. Okay. And he asked, what kind of balance sheet is this? Is it a bank balance sheet or an individual balance sheet or a company balance sheet or joint venture balance sheet? He asked you people. So what would be your answer? How you will guess whether it's a company balance sheet or an individual balance, sole trader firm balance sheet or a partnership firm balance sheet? How you can guess the balance sheet is so and so balance sheet?
Sorry, Naveen, I
We
missed
already
it.
have an heading, right, for that?
I said he has not mentioned any heading.
Bookkeeping.
Based on the transaction.
No transaction, right? Piece of paper prepared a balance sheet, a vertical balance sheet or a horizontal balance sheet.
Sorry, Naveen, I missed it. There are different types of balance sheet, like joint ventures, intercompany balance sheet.
So how can see that's what I'm saying. Whatever balance sheet it is there, how can you? He has given on the paper the balance sheet. So how you can say that this particular balance sheet is related to this? On what basis?
Or on the basis of transactions,
Transactions included.
like if this purchase of sales, data.
See, in balance sheet purchases, sales will not come, I believe.
Yes, purchase not come, data and creditors.
That's what data and creditors. But on what say every balance sheet will have a data, creditors, assets, liabilities, right? Balance sheet does indicates that assets and liabilities and assets.
Yes.
Correct. He has given because you people have done 5 years or 7 years of accounting. So on a piece of paper, he's asking like, what kind of balance sheet is this? He has prepared. How many particular formats we can prepare a balance sheet?
In two formats.
What is that?
Vertical and horizontal.
No, that is a method. This is not
prepared side by side methods.
Mhm.
Like we can we can write it as liabilities and assets side by side, and in a separate like be upside.
No. That is horizontal and vertical only. What you are saying?
Okay.
That is horizontal and vertical only. Okay. Any idea, anyone?
The one has like share capital and all would be like what I know is like it is given as a separate thing, and in liabilities also there is a differentiation
Share
of
capital is also a liability item, right?
correct. So that all would be given in one, like it is given in a format. I am not sure what is the name or what is the method, but
I'll tell you that.
Types of balance sheet, Naveen.
That's what. It's very important.
So it's a common size comparative balance sheet, vertical balance sheet.
Sorry.
It's a common size balance sheet, comparative balance sheets. vertical balance sheets.
I'm asking what kind of balance sheet, which is vertical, horizontal. It's a method I said.
Like current assets, non-current assets, those are total assets.
What do you mean by current assets?
Current assets in the sense like furniture.
Furniture current asset?
The long-term
No,
asset.
no, furniture is not a current asset. Like goodwill is a current asset.
Cash is a current
No,
asset.
goodwill is
Cash
not
is
current
a
asset.
Current
Anything,
asset.
anything it came into the
Cash in
liquidity
hand,
within a
cash in
year.
bank.
Within a year, the
Within a
company.
year in the sense from when to when?
Financial year.
As I mentioned, cash is a current asset. Okay. Prepaid expenses are the current assets.
Why prepaid expenses as current asset? On what basis we can say that prepaid expenses as current asset?
Prepaid expenses means
not
that
an
we
asset.
already paid in advance, so that will be an asset only.
That's what it's an asset, but how can you say that why not it's a fixed asset?
Whatever is happening on a day-to-day basis, right? That will be a current asset. Day-to-day
Furniture, is it a fixed asset, current asset, or what?
Fixed.
fixed
Fixed.
furniture,
Well, it is using day to day, right? In our business.
but it is a fixed. So we only purchase
For
But we can use it
transaction,
for a longer
that
time.
will not
Longer
be
time,
used
more
for
than a
the
year.
transaction.
every day. We won't purchase the furniture. Every day we
Yeah.
won't purchase the machinery.
Mhm.
So it is a capital to the business. So
Mhm.
that is a fixed asset.
What is again? You're pulling my leg. Capital is liability, right? How can you say that furniture is an asset?
So whatever is required once a while to the business, like to produce some products, we will
I have
purchase.
purchased a machinery and I have sold it in 2 months because it's not suitable, and I have purchased another machinery. And unfortunately, even that was also not suitable. And I have sold that and I have purchased another machinery.
No, that will not happen in everywhere. So in general,
I'm asking in general, it is happening with me. Then what I need to consider in my balance sheet? It's immaterial for me what others are considering. But in my balance sheet, what I am supposed to consider?
Then you will calculate a depreciation on that. Right?
So 2 months, what should the depreciation I can calculate?
For 1 year, okay. Mm-hmm.
Fixed asset is something like which can be helps in it's something like
fixed assets are machinery, furniture. These are all
Hey,
fixed
if you are using the name as in machinery, my straight question, why machinery is considered as a fixed asset?
no which helps in production activities
Mhm.
and which will be
Cash
done.
will not involved in production activity. Or what are the current assets?
Current assets.
Cash in hand, cash in bank.
Cash in
Okay.
hand, cash at bank.
And only 2.
Oh,
Sundry datas.
Mhm.
yes, sir.
Why sundry debtors are current assets? Why can't it could be a fixed assets?
Because what are the difference between the current asset and fixed asset is like for current asset we can use it we can utilize for within 1 year, or fixed asset we can use for longer period of time, more than 1 year or 5 years. This is
1 year in the sense from day of purchase.
one financial year.
See, again, I'll reiterate for because see, when you visit a client place, so he say that these are my regular assets. Regular accounts I am using in my, so there are 10,000 accounts are there. So as a consultant, we need to define which one is a what item. Is it a direct expense, indirect expense? Again, it's an expense income. So again in income, again we have a differentiations: direct income, direct expenses and indirect expenses, direct incomes and indirect incomes. So again, capital expenditure, revenue expenditure, right? So we need to have a knowledge on that. So if we have a knowledge on that, then only we can do this chart of accounts part. Clear? So here, before I'll start a chart of accounts part, I'll give you a small intro of your assets, current assets, how many types of balance sheets we can prepare. By looking at that, which balance sheet you are able to say, whether it's a company balance sheet or an individual firm balance sheet or a partnership firm balance sheet or what it is. Okay, so without heading, you can guess it. So first of all, I'll go with, so simple. I think I have covered in the starting sessions what is asset, liability, and all those stuff.
No.
Okay, so asset means See here, as I already told, whenever we are doing accounts, we need to cover, we need to consider ourselves as a business. Correct?
Yes.
Naveen is a different person and business is a different person. According to which concept? According to which concept?
Matching concern.
Business entity concept.
Exactly, business entity concept. As per the business entity concept, owner is different from business.
Business.
And as long as we are doing accounts, okay, business accounts, then we need to consider ourselves as a business. We need to consider ourselves as a business. Clear? So here asset is nothing but, what do you mean asset? Whatever business or firm or organization owns, whatever business or firm or organization whatever business, firm, organization owns, then they are called assets. Okay, so assets are broadly classified into two types. Assets are broadly classified into two types. Okay. Assets are broadly classified into two types. One is, one second. Sorry, actually, it's stuck actually. So right now, assets are broadly classified into two types. Assets are broadly classified into two types. First one, current assets, and next one is fixed assets. We have investment, one more asset, I'll tell you that later. Fixed assets. Owner capital is nothing but investments. Other investments outside, not owner capital, other thing. Okay, first one, write down current assets. Current assets. The assets which can be converted into cash quickly. The assets which can be converted into cash quickly. Then those assets are considered as current assets. Understood? What does it mean? The assets which can be converted into cash. Okay. Liquidity is nothing but the asset which can be converted into cash immediately. Then that is considered as a current asset. Understood, everyone? Yes, no?
Yes.
Yes.
Right? So here, considered as a current assets. So, but here again, people will ask the question. If you ask the definition, what do you mean by current assets? And if you give an answer, the assets can be converted into cash quickly. Then those assets are considered as a current asset. Then immediately you will get a question from them. What do you mean by quickly? How much time? Okay. Quickly in the sense, nothing but within a year. Within a year. Okay. So what is the other answer? The assets which can be converted into cash within a year, then those assets are considered as in current assets. Considered as current assets. Is this clear now?
Yes.
Right. Again, you will get one more question. Within a year, in the sense from when to when? When to
in
when?
the financial year.
Yes, from financial, within a financial year, in the sense from preparation of one balance sheet to preparation of another balance sheet. So normally balance sheets will be prepared one balance sheet to another balance sheet. What will be the time gap?
1 year.
1 year.
1 year.
Understood. So here the assets which can be converted into cash quickly. So how much quickly? In the sense 1 year time. 1 year in the sense from when to when? From preparation of one balance sheet to preparation of another balance sheet. Then those assets are considered as in current assets. Is this clear?
So furniture also current asset?
So no, furniture is not current, fixed assets. Sorry.
That cannot be converted cash in a year.
Yes, of course. For example, you are running a college. Okay. Your business is college business. So you purchased furniture is required for you or not?
Yes, required.
Right. So you purchased furniture. So will you use for longer period or will you use only 1 year and after that you will remove that and again you will introduce new furniture?
No, I'll use for longer period.
Understood. The assets which can be converted into cash quickly within a year time, then those assets only be considered as in current assets. Which cannot be converted into cash within a year time, then they are considered as in fixed assets. Is that clear?
Yes.
Yeah. Next one. So example I'll give you. So example, cash in hand. As I said, because cash in hand or cash, I don't want to say cash in hand, cash. So already it's a liquid. It's already liquid form. Clear? So it is considered as the most liquid asset is cash. And next one, cash at bank. Cash at bank. So if cash is there in your bank, how much time will it take to withdraw? If ATM is near to you, 5 to 10 minutes.
Yes.
So is it a within a year or with more than a year?
Within.
So cash at bank. Next one, sundry debtors. Next one, bills receivables. Next one, prepaid expenses. Next one, accrued incomes. Nothing but incomes to be received. Clear? Cash at bank, sundry debtors, bills receivable, prepaid expenses, accrued incomes. Accrued in the sense you have already worked, but you haven't received the income for that particular. So you are going to receive within a year time. Is this clear? These all are considered as in current assets.
Naveen, can you just let me know why are these debtors called as sundry debtors?
See, what do you mean by debtor?
So we have to pay him, right?
No, debtor in the sense the person who he need to pay us.
Oh, got it.
You have given a loan to him from whom we need to receive. Understood? He is a debtor. Clear? Nothing but you are doing a credit sales to
Yes.
him. You have done a credit sales to him and he need to repay back to you. So something which you need to repay back from a person, that person is known as a debtor. To whom you need to pay, then that person is known as a creditor. Understood?
Yes.
Yeah. That what do you mean by sundry here? That in a day-to-day business, we are not going to sell only one person on a credit base. Correct? We will sell thousands, hundreds of people, hundreds of customers. Correct or not? Do we sell only one person on a credit basis or number of people?
Number of people.
So in the balance sheet, we can't show all the people. What is the due we need to receive from this particular person, due from this particular person. So balance sheet we can't do. In the ledgers, we can prepare individual data. But what in balance sheet we will do? We will club all the individual data total amount, and we will call it as a sundry. Sundry is nothing but group of data. What do you mean by sundry? Means
Group of debtors.
yeah, if we are writing only debtors, then debtor is nothing but only one person. But we are writing when it is a sundry, then it is nothing but a group of debtors, number of debtors. Understood? Yes. No.
Yes, ma'am.
Yes,
Next
ma'am.
one, fixed assets are nothing but simple in other way around. The assets which cannot be converted into cash quickly. Quickly in the sense
Within a year.
within
Within
a
a
year,
year, not
within a year we can't convert. Within a year in the sense,
one balance sheet to another balance sheet.
so the assets which cannot be converted into cash from preparation of one balance sheet to another balance sheet, then all those assets are considered as in fixed assets. Right? For example, furniture, machinery, okay, buildings, land, goodwill, etc. Is this clear now?
Yes, Naveen.
Yes.
Okay. So here again, fixed assets are further classified into two types. I don't want to write all the stuff. Fixed assets are further classified into two types: tangible fixed assets, intangible fixed assets.
Yes.
Okay, tangible fixed assets is nothing but the assets which you can touch and we can see. Those are nothing but tangible fixed assets. Okay, like your furniture, machinery, building, okay, land, etc. But what do you mean by intangible fixed assets? The assets which cannot be viewed, which cannot be seen, and which cannot be touched. Okay, nothing but a brand, goodwill,
Patent.
patents, trademarks. Clear? All the stuff considered as an intangible fixed assets. So whenever you need to write tangible fixed assets, intangible fixed assets. So fixed assets which cannot be converted into cash from preparation of one balance sheet to another balance sheet. So again, fixed assets are further classified into two types: tangible fixed assets, intangible fixed assets. Clear? Any questions?
So, Naveen, in your prior example, now the machinery will become a current asset, right? You
No,
purchased
it's a
it, you
fixed
sold
asset.
it.
It's a fixed asset. In prior example, actually at the time of purchase, that's what with the what intention I'll purchase that.
Okay, for a longer term, longer
Correct?
use.
At the time of purchase, what is your intention? Is it for sale or is it for continue use?
Continuous use.
So at that particular point of time, then it is considered as a fixed asset only. If something which you purchased for resale, your business, as I said, that you are a furniture dealer. You are a furniture dealer. What is your business?
Furniture. You're just
You will buy
buying it
furniture,
and selling it.
selling it.
Yes.
So something which you are buying and selling, then it will not considered as an asset. It will become a good. Understood?
Understood.
Yeah. Same for electronic dealers. Computer. Is it a good or an asset? You are an electronic dealer.
It's a good.
Goods, that's it. You are a cloth, your business is cloth business, and you have purchased computers.
Asset.
That's an asset.
Sign asset. Understood now?
Yes.
Yes.
So here the most of these are the accounts, ledger accounts. Cash is one account, per like cash at bank is one account, debtor. So chart of accounts. So here chart, as I said, that it's a library of accounts, correct? So what are the accounts? Now we know that. Next one. So how balance sheets will be prepared, right? So any balance sheet will be prepared in two different types. Clear? First one, write it down. It's very important. In order of liquidity. So first of all, write it down. Group concept called, it's very important concept, grouping and marshalling. There is a concept in accounting, grouping, and how many people know this? I don't know. Grouping and marshalling. Grouping
What
and
is
marshalling.
like
Grouping
concept?
and marshalling. This is most important concept in accounting. A bit louder if someone asking questions.
So this grouping and marshalling, if this is a concept you're telling?
Concept in accounting, people need to understand before doing a final accounts or whatever accounts.
Okay.
Anybody can explain what do you mean by marshalling? Anyone?
As someone said, like in liability side, there is subgroups, and grouping is something like, for example, in current liabilities, whole current liabilities we will enter. But in marshalling, something like we will have some equity shares, and there
No,
is
no,
a
no, 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 no. I'll tell you. Grouping is nothing but, write down. Grouping is nothing but recording similar nature of items under one particular head. Similar nature of items under one particular head is known as grouping. For example, if I take cash in hand, cash at bank. Okay, next one, sundry debtors. Okay, bills, receivables, prepaid expenses, accrued incomes. So which group we can write all this?
assets,
What asset?
current assets, current assets.
Current asset, correct? So all the current under heading called current assets, we can write at once all these assets. Same time, if I write machinery, furniture, buildings, land, goodwill, etc. On which head we can write?
Fixed assets.
Under fixed assets.
Fixed
Same
assets.
time in liabilities also we have different types, two different liabilities. Long-term liabilities, short-term liabilities, and fixed liabilities. Clear? So long-term liabilities, same thing. Current liabilities are nothing but the liabilities which we need to pay within a year time. Whatever liabilities we need to pay within a year time, then those are nothing but current liabilities. And what do you mean by long-term liabilities? The long-term liabilities are nothing but the due for payment will not fall within a year time. Okay, it will spread for several years. We need to pay in future. Okay, and when it comes to fixed liability is nothing but owner's investment. After paying all the liabilities, then we will pay owner. Whatever remaining amount is there, that will be paid to owner. So that is called fixed liabilities. Understood? Current liability, long-term liability, fixed liability. Current liability, the liability due for payment falls within a year time. Within a year in the sense from preparation of one balance sheet to another balance sheet. Correct? And what do you mean by long-term liability? Long-term liabilities are nothing but the liabilities due for payment will not fall within a year time. Then those are nothing but long-term liabilities. Like you took bank loan. So bank loan normally falls more than a year, 2 years, 3 years, 5 years, like that. Clear? Sundry creditors, current liability, because whatever amount we will take from creditors, we need to pay within a year time. Hope AP people knows that, whoever working on accounts payable. So sundry creditors is nothing but your supplier. So what would be the payment terms normally? What are 30 days, right? 45 days, 60 days, 90 days, 120 days, right? 180 days. That is max to max 240 days, not 365 days. You won't find any payment term to 365 days. So which is nothing but less than a year. Any questions still here, anyone? So that is called grouping. Right? What do you mean by grouping? Recording similar nature of items under one particular head is nothing but grouping. Is this clear, everyone?
Yes,
Yes.
Naveen.
Yeah. Then what do you mean by marshalling? The concept called marshalling. Marshalling is nothing but, okay, order of writing. It's very important. Order of writing assets, order of writing liabilities and assets in balance sheet. What is the order you will follow normally when you prepare your balance sheets in intermediate or degree or your MBA or MCOM or whatever?
First, we will write the current assets
Mhm.
Current
or
liability.
fixed.
What is that balance sheet?
We will write liabilities one side and assets one side.
That is okay. But what you will write in the order I said?
Current assets, fixed assets, then liabilities. Current liabilities and
The
long-term
liabilities-
liabilities.
On the
So
liability side, we
what is that? What is that actually? What kind of balance sheet is that?
Company balance sheet.
On what basis?
It's a sole proprietor balance sheet.
Why? See here again, I'll tell you. So yes, order of writing liabilities and assets in balance sheet. So there are two types of balance sheets. There are two types. Two types of balance sheet. First one, it's very important. Order of liquidity balance sheet.
Sorry, Naveen, disconnected. Can you repeat marshalling?
Marshalling is nothing but order of writing liabilities and assets in balance sheet.
Okay.
Right? Whatever items are there, we need to write in a specific. First item need to take first this, after this, after that, this, after that, this. So we need to write in a particular order.
Okay.
Clear? So that order is considered as an marshalling in balance sheet. So here there are two types of orders we have. Okay. One is order of liquidity balance sheet. And second one, order of permanence balance sheet. Order of liquidity balance sheet and order of permanence balance sheet. Understood? So what exactly liquidity now? In this format, what we will write is, first write down order of liquidity balance sheet. On the asset side, first one write down order of liquidity balance sheet. On the asset side, the most liquid asset, the most liquid asset will be written first. Most liquid asset will be written first. That is cash in hand. And the least liquid asset will be written last. Least liquid asset will be written last. That is goodwill. That is goodwill. Whereas on the liability side, the most urgent payment will be written first. The most urgent payment will be written first. That is bank overdraft. And the least urgent payment will be written last. That is capital. That is capital. For example, you can see this order of liquidity balance sheet, how it looks. Okay. So if you take on the current liability side, first liabilities, so under liabilities, first heading would be current liabilities, the most urgent payment. On the right side, current assets. Okay, under current liabilities, the most liquid liability, most urgent payment. So first, whenever credit card, whenever we withdraw, we need to pay within 45 days. So that would be the most urgent payment. So that is nothing but bank overdraft. I'm just taking an example. Okay, bank overdraft. Next one, sundry creditors. Next one, bills payable. Bills payables. Next one, outstanding expenses. Outstanding expenses. Next one, unaccrued incomes. Unaccrued incomes. Okay, so these are the current liabilities. I'm just giving an example. Okay, next one, long-term liabilities. Long-term liabilities. What are long-term liabilities? For example, bank loan, bank loans, and unsecured loans. Okay, these are the long-term liabilities. Next one, fixed liabilities. Under fixed liabilities, capital. Okay, if any add net profit, okay, or if it is loss, we will deduct less net loss. Next one, if any drawings are there, we will deduct drawings. Understood this? So under current liabilities, first item would be yeah. So understood everyone?
Yes.
Any questions? So this is the order on the liability side. So when it comes to asset side, sorry. Okay. So here current assets, cash in hand. Cash in hand. Cash at bank. Bills receivables. Okay. Prepaid expenses. Prepaid expenses. Accrued incomes. Accrued incomes. Next one, investments. So under investments, okay, invested in financial institutions for earning interest. Okay, then next, fixed assets. Okay, furniture. Buildings. Machinery. Land. I'm just taking examples. Last but not least, the least would be goodwill. And here also you can take one more item. Stock. Write it down once. So if you don't want to write, it's okay. Okay, this is called liquidity order. Means asset side, the most liquid asset will be shown first. That is nothing but cash in hand. And the least liquid asset will be shown last. When it comes to liability side, the most urgent payment will be shown first, and the least urgent payment will be shown last. Means what after doing all the payments, we'll do the payment to owner. Clear, everyone? Order of liquidity. Yes, no.
Yes, it's clear.
Okay. Next one, write down order of permanence. Order of permanence. Write down. This order is completely opposite to liquidity order. Completely opposite to liquidity order. In this order, on the asset side, the least liquid asset will be shown first. And the most liquid asset will be shown last. Whereas on the asset side, the least urgent payment will be shown first. What is that? What would be the least urgent payment?
Capital.
Capital will be shown first. And the most urgent payment will be shown last. Okay, the most urgent payment will be shown last, that is bank overdraft. So understood now, everyone? So there are only two methods or two types: liquidity order, permanence. So in liquidity order, now you know what has to be done, and in permanence, what has to be done, right? And write down note, note under that. Write down under that. Sole trader firms, partnership firms, banks,
What was it? Please?
sole trader firms, individual firms, individual businesses. Sole trader firms or individual businesses, partnership firms, banks, and other businesses will prepare their balance sheet as per the liquidity order. As per the liquidity order. Full stop. Companies will prepare their balance sheet in order of permanence. In order of permanence. In order of permanence. Clear this now? So if someone is showing you, then we need to check the order. Is it current assets are first
So
and least?
companies will follow.
Sorry? Sorry?
So companies will follow the most in payment wise, they will follow the first
Not
one is
payment,
last.
not payment. Assets and liabilities. The most, that's what I said, right? They will show
Least
first.
urgent payment will be shown first, right?
Correct.
So the most urgent payment will be shown last.
Which one? Which one you're saying?
Order of permanence.
No, I said reverse, right? The least urgent payment will be shown first and the most urgent payment will
Yeah,
be shown
that's
last.
what that's what I read.
Okay, fine.
Yeah.
Clear now?
So companies will follow this order of permanence.
Order of permanence, exactly. So you need to, so whenever you are entering into a client as an individual firm, then you need to configure their balance sheet in order of liquidity format. And you are working for a company, right? Then you need to check what you need to prepare their balance sheet configuration as per permanence order. Anyone have a questions on this? It's very important. So that's the reason normally directly I can start the chart of accounts, but you need to understand what do you mean by grouping, marshalling. Grouping is nothing but recording nature of items under one particular, similar nature of items under one particular head. And when it comes to marshalling, order of writing, whatever group we have done, and we need to write in one particular order, then that is considered as in marshalling. So chart of account is nothing but whatever accounts are involved in day-to-day transactions. We have seen cash in hand, cash at bank, furniture, building, like purchases, sales, and all those stuff are nothing. What are your accounts? Any questions?
Naveen, can you repeat once again the note?
Yeah, right on. Write on a note. The liquidity order of balance sheet, vice versa, you can just don't strike it out. The liquidity order of balance sheet will be prepared by sole trader firms, partnership firms, banks, joint venture firms, or any other. Okay. And when it comes to permanence order, companies will follow or companies will prepare their balance sheet in order of permanence method. In order of permanence method. Clear this? Anyone have questions on this? Yes, no.
Yes, clear now.
Okay.
Naveen,
Yes.
does the sole trader compulsory needs to follow the liquidity concept,
Yes.
liquidity order,
Yes.
or else he can follow the permanent order also?
No, no. Because this is a permanence order for, as per Companies Act 1956, this particular order has to be prepared for companies. Individual firm,
Okay.
if you are registered, if you are not registered, it's okay. Anything you can prepare. But your firm is registered. Individual firms also will register, right? So then you
Yes.
will be a limited kind of thing. So then definitely you need to follow liquidity order.
Got it. Thank you.
Okay, right now, chart of accounts. I'll take just today chart of accounts group. And tomorrow mostly we will have a session little bit more. So can we have tomorrow? I'll tell you after conclusion. This chart of accounts, put a heading. Okay. Then next I will show this. Chart of accounts. Next one, accounts group, account groups. Next one. So the structure is like this. Individual accounts, nothing but GL master data. GL master data.
Which is the structure? What after chart of accounts, account group?
Chart of accounts, we need to first create chart of accounts. Under that, we need to create account groups and we need to link it to chart of accounts. And after a creation of account groups, we need to create individual accounts, GL masters. So here's nothing but we are grouping, we are creating a groups. And after that, GL masters. Clear? So first we need to do chart of accounts, the next account groups, and the next GL masters. Clear?
Okay.
Just write it down. Chart of accounts, account groups, GL master data. Write down. Write down. Chart of accounts. Already we have written what do you mean by chart of accounts, right? So we can create three types of chart of accounts. We can create three types of chart of accounts. SAP. Okay. Three types of chart of accounts. First one, operational chart of accounts. Chart of accounts. It's a required. It's a mandatory. Okay. Second one, group chart of accounts. Group chart of accounts. It's optional. I'll tell you what is. So if it is required, we will create it. If not, we won't create it. Okay, but it's optional. Next one, country specific. Chart of accounts. This is also optional. Write down. Only operational chart of account is mandatory. Remaining two are optional. Group chart of accounts and country specific chart of accounts are optional. Okay. Understood. There are three types of chart of accounts. One is operational chart of accounts, which is mandatory asset, group chart of accounts, and country specific chart of accounts. Any questions still here?
Clear, Naveen.
Right. So here, once you're done, okay. So we can go with this chart of accounts. We can go with 1:n methodology. 1:n methodology. Okay. So here, what does it mean? So we have prepared one chart of accounts. We can use this chart of accounts for number of company codes. Means we have a different company codes, right? UT01, something like that, UT02 and UU01. So how many company codes we have? Three. So same chart of accounts we can use for number of company codes. That is called 1:n methodology. One chart of account can be used for n number of company codes. Clear, everyone? What do you mean 1:n methodology?
Yes. Yeah.
We can use one operational area for many company codes.
Many company codes, right? So for example, I'm going to create one chart of account called UCA, Ultratech operational chart of accounts. So I can use this chart of accounts to what is UT01, right? UT01, UT02, and as well as UU01. Clear? So this is called 1:n method. This chart of accounts we can use okay. Okay, next one we have another methodology, 1:1 methodology. So one chart of account is used for one company code. 1:1 methodology. Okay, so here USEA, okay, UOC1, UOC2, UOC3. Okay, so in each individual company code we can have one chart of account. So UT01, UT01, one company code. Is it company code UT01 only, right? Yes. UT02, UT03. So how it works? Just write it down. Just write it down.
UOC1 is one chart of account.
Which one?
UOC1 is a one chart of account.
Correct.
UOCA is
UO,
UOCA.
where is you? See, this is nothing but a group chart of account. We will create one group chart of account. Under that, you are going to create one sub chart of account, which is linked to each company code. Okay. Yeah, just write it out. So remember, we have created credit control areas, Indian
Yes.
credit control area, UICA, and US credit control area. We have created UUCA. Right. So here 90%, most of the companies will follow 1:n methodology. Most of the companies will follow 1:n methodology.
Means group chart of accounts with number of company codes.
Sorry,
Means group chart of accounts will be used for number of company codes.
group chart of accounts, not group chart of accounts. One operational chart of accounts. We are going to create operational chart of accounts, and that will be used for number of company codes. Clear?
So here in 1:1, UOCA is a
Okay, you can, if you are having confusion, then you can write this as an UGCA. Okay, Ultratech group chart of accounts. Under that, one group can have 3 operational chart of accounts, and each company code can have individual chart of accounts. This is a group chart of account. Under group chart of account, individual operational chart of accounts, and each company code have its own operational chart of accounts. Clear, everyone?
no, not clear.
What is the issue?
Not clear. So first one 1:n, you are taking the operational chart of account.
Correct.
Okay, and using for number of company codes.
Correct.
The second one using group chart of accounts.
Means what is my criteria? Listen, what is my criteria? I want to use each individual here. Each company code can use the common operational chart of accounts.
Yes.
So then I can go for 1:n methodology. But here, what is my criteria here? I want to use separate chart of accounts for each company code. Understood?
I got that.
Just now you said you didn't got it. That's what I'm explaining.
No, what I'm saying is that concept I got it. One operational chart
Correct.
of number of company codes, and the second one one chart of account to one company code.
Correct.
And the first line you given the group chart of accounts and
Correct.
the sub chart of accounts.
It's not sub. It's all. This is a group chart of account, and these are operational chart of accounts.
Okay.
Right? Figure at the end what I want each chart of account report, right? Group chart of account report. So that's the reason we here, if you are going 1:1 methodology, then you need to create first group chart of accounts. Then next you need to create three operational chart of accounts.
Okay, got it.
Right? But here 1:1 methodology, here you need to create only one, no need of creation of group chart of accounts. You need to create only operational chart of accounts, only one operational chart of account. But here you need to create one group chart, and that has to be linked to individual operational chart of accounts as per the requirement. and that can be assigned to individual company codes. Clear?
Yes, yes.
Any other?
No, no.
Clear, everyone? It's very important. Group chart of accounts and okay, for example, we are creating GL accounts like this. So I'll take this as it's not like that. It's again depends, not 6 digits. It's not mandatory to have only 6 digits. Clear, Charan? Up to maximum 10 digits we can have.
Okay.
I'll take this later, but try to understand this concept because again you will get confusion. So this particular concept, is it clear? 1:n methodology, 1:1 methodology.
Yes, Neville. So when they will use this 1:1 methodology, Neville?
As per the client requirement, client says that I have a 3 company codes, but each company code I want to prepare separate set of accounts. But and client says that okay, I have a 10 company codes, but I want to use only one chart of
Only
account.
one.
Common.
Yes.
Then you need to go for 1:n methodology, and as per the specific client requirement.
No.
Clear, everyone? So normally 95%, I can say that 99% will follow their chart of accounts 1:n methodology. Clear? Any questions? Okay. So even we are also following in this particular project 1:n methodology. Able to see, so I'm sorry it got disconnected. As I said that there is power breakage is there. Hello.
Yes, Naveen.
Sorry.
Be able to hear you, but your screen not able.
No, I'll share the screen. Now is it clear?
Yes.
Yes, it is.
Just write it down. Okay, so we are going to follow 1:n methodology. That is nothing but one chart of account for all the company codes. But the procedure would be the same, not an. Okay.
Yes.
Any other questions? Right on. First one, operational chart of account. We have a 3 chart of accounts, right? Write down. Write down. Operational chart of accounts. Operational chart of account is a mandatory chart of accounts. Operational chart of account is a mandatory chart of accounts for every company code. For every company code. For every company code. Operational chart of accounts. It will be used to record. It will be used to record. It will be used to record all transactional data. All transactional data. All transactional data into SAP. And also we can generate. And also we can generate. And also we can generate all financial reporting reports. All financial reports for legal reporting. All financial reports for legal reporting.
Can you read it once?
The complete sentence.
Yes. Just read.
Okay. Write down operational chart of accounts. I'll reiterate for everybody's benefit. Operational chart of accounts is a mandatory chart of account for every company code. Operational chart of account is a mandatory chart of account for every company code. It will be used to generate, or you can write as it will be used to record. It will be used to record. It will be used to record all transactional data into SAP. 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 And also we can generate. All financial reports for legal reporting. For all financial reports, legal entity, for legal requirement. Clear, everyone?
Yes, now.
Okay. So what we will do is, actually we'll continue the next part tomorrow. What do you mean by group chart of accounts? And what do you mean by country specific chart of accounts? But before understanding operational chart of accounts, try to, because if I go through this, then it would be a complete literature part. So before that, what I advise is, so try to understand what do you mean by chart of accounts? What do you mean by grouping marshalling concept? Clear? And try to understand the types of chart of accounts. 1:n methodology, 1:1 methodology. Clear? And in this particular project, we are going to have 1:n methodology. Clear? And I'll show you that 1:1 methodology also. Okay. And just check it out. The operational chart of accounts. Clear? Any questions till here? And again, I'm reiterating, because don't rush your topics, right? So whenever you are getting a time, please try to practice this, because rushing up, finishing up would be clear. If I want to finish the things, then definitely I would have, I like not going to cover, I'm not supposed to cover this particular thing. Grouping and marshalling. So give me some time to give you complete concept. Clear? As I said that our course will get completed by 8 to 9 months max. Right? And meanwhile, only if you are rushing up, then hardly within 4.5 months, we are going to finish our FI part. Then you people will be ready to attend interviews. But when you are going to ready interviews, in the sense, whenever you get a time, please practice it. A lot of practice is required. Hope you can
Sure,
understand.
Naveen.
That's what. Look,
Yes, yes.
it's like if I'm covering a short topics, because wherever important, I'll take last week, Saturday, we have completed majority things. Definition, we have completed. Assigning, we have completed. So no logic is required. We need to remember the transaction code and navigation path. But here subject is required in this particular topic. And as I clearly said that 90% questions, not majority questions will cover in global company code, global parameters. So people doesn't have a knowledge on operational 1:10 methodology, 1:1 methodology. So please, it's a humble request, go through the topics. Clear, everyone?
Yes, Naveen.
So if you don't have any questions, we can call it for today and we will start tomorrow the continue. But before that, please go through the still operational chart of accounts. Is it
Sure.
any questions from anyone?
Nothing much, Naveen. Thank you so much for explaining in detail regarding the concepts and everything.
Thank you. Thank you all. Thank you.
Thank
See you in
you.
tomorrow's session.
Thanks, Naveen. Thanks for your detailed explanation. Thanks.
Thank you all.
Thank you very much for your patience as well.
No, not at all.
We are asking numerous questions.
No, you people, like, you need to ask any number. So please don't stop your questions and yourself. Please, because it's benefit for everyone. That's the reason. See, normally once we complete this global parameters or configuration part, definitely you won't get major questions, majority questions, because the concept would be get cleared, and definitely you will be in this one, because we are in initial stages. So that's the reason people will get a questions. And as I said that I'm not with, I don't have a restriction with the timeline. The major part is I want to give you the end-to-end knowledge, not pakka commercial kind of thing. Thank you.
As you said earlier, right? The topic is very interesting.
Yeah, that's what it will be.
Good. It was very interesting, and the way you explained was very much clear for us.
Thanks a lot.
Seriously.
Yeah, see you
It was very
tomorrow.
much explained.
Thank you.
Mhm. Okay.